Trading styles. So as we get into the advanced sections of this course, we're going to be looking at trade setups. And before we start to go into that, we're going to go over the types of trading styles that you can choose to be as a trader. Now, we touched on some of this in the past section of time frame analysis, but we're going to be giving a bit more in-depth overview of position trading, swing trading, day trading, and scalping. Now, the purpose of this is to help you understand the mentality and the setup behind each strategy, but also really think about what type of trader do I want to be. And as I start to develop my own idea of the tools that I want to implement around my trading style, what am I looking for as a trader? And we're going to get into that right now. So position trading is going to be focusing on the high time frame macro analysis. I have months and years on here because I want to really make sure people understand that this course can be used with other markets as well. It's not specifically crypto. So in the case of a traditional market or a commodity, months and years is more relevant to the high time frame macro view because there's more history of that price going back in time. Cryptocurrency is a new market. It's a younger asset class, so we don't have as much data to look back on. But if you remember in the market structure analysis video, we looked at gold on a monthly chart. Now, position trading is identifying key swing points around those high time frame levels, and you're almost trying to catch an inflection point of a macro trend, right? So you've identified a high time frame support, you want to be a buyer there, you're looking for higher lows and higher highs to begin as your trade unfolds, or vice versa, a macro top, you're taking a short position, you're looking for lower highs and lower lows on a high time frame basis. Swing trading is similar to position trading. And in the case of crypto, it's going to be more your macro view because, as we just spoke about, it's a younger asset class. But you're going to be looking at swing points. Remember, this all comes together. We want to identify our support and resistance levels, our swing points, and we're going to be looking at a daily, weekly, or monthly chart. And as we get into the examples of this, you're going to see what I mean by that. Day trading, we're looking at a lower time frame trading strategy. You could take daily swings, or day trading can be defined as taking a position within that interval. So in the case of a cryptocurrency market, that's 24 hours a day. I would be opening and closing position during those market hours. As it pertains to traditional markets, the market hours are different. Scalping, this is looking at a low time frame trading strategy. Shorter term, we like to use scalping strategies in range-bound markets or consolidation zones, where we've seen that ping pong conversation between buyers and sellers, buyers at support in the demand zone, sellers at resistance in the supply zone, and identifying strategies and potential entries around that to take a lower time frame trade, which could be minutes, hours, days. And we're going to get into that. So let's start with looking at what a position trader really looks at and how the psychology of that position trader is defined. So as we talked about, this is a higher time frame macro strategy. This is your true set and forget mentality. Position traders are trying to catch a macro move for an extended period of time with the trend. So you want to be able to identify those key points, and you want to get in at a level where you think price is at an inflection point for possibly moving into bullish market structure on a high time frame, bearish market structure on a high time frame being a short position, and looking at range-bound consolidation zones for potential higher lows for a long position, or we're looking at lower highs for a short position, and getting in on that trade and holding it for a long time with an anticipation of the trend. Swing trading, it's similar to position trading, but it's a smaller time horizon. And the way you manage to trade and hold that trade is typically looking at the swing points, and that's going to be in a lower time frame. It's not necessarily looking to catch macro tops and bottoms. This can be key swing points on a high time frame, and we're going to get into an example of that. Moving to a low time frame trading strategy, and the way this is crafted and the trader thinks about this is, as we spoke about, day trading, taking position during market hours and closing out before the end of that day. So they don't necessarily want risk, maybe overnight, or exposure. So they're opening and closing the position, they're in cash or whatever asset that is, and they're looking for the next day to imply a similar setup around that strategy. As we said, crypto is 24/7. Other asset classes have different market hours. Scalping, low time frame strategy, can be minutes, hourly charts. Consolidation range-bound markets are very good around swing points, and we're going to get into examples of this as well.